Investors often think U.S. income ETFs are just for Americans, but inside an RRSP, Canadians can tap them too, withholding tax free. And with U.S. markets climbing, these 5 ETFs we're going to look at today, they're paying solid income and posting real growth. Hold on to your seatbelts, folks. This is going to be a good one. I've had a lot of requests for this one, a proper look at some U.S. income ETFs. So, well, I do what I do. I pulled together 5 that are not only dishing out strong dividends, but have all gained ground over the last year. I've often said that if an income ETF is losing ground in a bull market, well, you guys know it does not belong in my portfolio. Of course, for most of you, these are going to be ETFs that fit nicely in your RRSP to avoid those IRS withholding taxes. Now, for my American viewers, these are ETFs that would be very comfortable in a Roth IRA, that's for sure. When it comes to income investing, most Canadians focus on domestic ETFs, and for good reason. We've got some solid options. But here's the thing. The US market is massive, and it's loaded with income-focused funds that tap into sectors or strategies we just don't have. Think global dividend plays, covered call funds on certain tech, or even gold income ETFs. And for my American viewers, the key isn't avoiding withholding tax, it's minimizing your own dividend taxes. That's where IRAs shine. Whether you're using a Roth or traditional, those accounts shelter high yield ETFs from the yearly tax drag that can chip away at those returns. So whether you're north or south of the border, the goal is the same: steady income, solid growth, and smart tax positioning. A sub to the channel is the best way to withhold nothing from your future content. Before we get into these ETFs, I want to give you guys, the criteria I used to help narrow down this list. The 2 big qualifiers, of course, were, big dividends and some growth over the last year. In addition to that, I only looked at monthly dividend payers this time around. Today's list is sorted by their 1-year total return. I do have to admit that I'm quite happy with the group that I did settle on. So yeah, without any further ado, let's do this. Kicking off our list at number 5, we have the Invesco QQQ Income Advantage ETF. It's got a ticker of QQA. This ETF is basically a spin on the NASDAQ 100, but with a bit of an income twist. QQA, of course, they hold some of those big names like Apple, Microsoft, and Nvidia. They then use a options overlay, so things like covered calls and equity-linked notes to generate extra cash flow. All right, I know a few of you are scratching your heads and going, equity-linked notes? Yeah, we have never mentioned equity-linked notes on the channel before, as they're not something you typically see in Canadian ETFs, if at all. In a nutshell, they are very similar in spirit to covered calls, but the structure is a little bit different. Instead of the fund directly writing call options like most Canadian covered call ETFs do, an ELN is a contract with a bank or a counterparty that wraps the option strategy inside a note. So basically, it's a third-party option seller. You can think of it as a more complex U.S. style of what Canadian investors are used to seeing. In the end, the goal is the same: steady income with some capped upside. All right, at the time of recording, the price of QQA is coming in at $54.10. They have an NAV of $52.96, and their assets under management, $379.41 million. Looking at their fee, their management fee comes in at 0.29%. Switching to their dividend, their yield is coming in at 9.61%, monthly dividend of 45.5 cents USD per share. Switching to their returns, their 1-year return on investment, 6.85%. Factor in those dividends, total return, 17.08%. That's not too shabby. It's a good start for sure. It is not hard to see how this ETF has had a great year when you look at the year technology has had. In our number 4 position, we've got the Goldman Sachs NASDAQ 100 Premium Income ETF, ticker GPIQ. This one, it is also giving you that core exposure to the NASDAQ 100 with a covered call overlay to generate some of that extra income. They can write covered calls on anywhere from 25 to 75% of their portfolio, depending on, of course, market conditions. Their three biggest holdings include Nvidia, Apple, and, of course, Microsoft. Looking at their price at the time of recording, coming in at $53.60, and they have an NAV at $52.89. Assets under management, I believe this is the biggest one today, 1.76 billion. Their management fee is also coming in at 0.29%. Looking at their dividend, they have a yield of 9.64%, monthly dividend 47.4 cents USD per unit. On to their returns, that 1 year return on investment 9.84%. Factoring in the dividends, we get a total return of 20.40%. Once again, we do have another strong technology income play. And like QQA, this one will shine provided technology stays strong, and in a bear market, it will lose some value, but the income should continue. Coming in at number 3, we have the Amplify CWP Growth and Income ETF. They have a ticker of QDVO. Now, unlike the previous two, which are built off the NASDAQ 100, QDVO takes a more active approach. It mixes large cap growth names like Apple, Microsoft, Nvidia, and Visa with a flexible covered call strategy that the managers adjust, of course, depending on those market conditions. That means it's not always capped the same way those index-based income funds are. There is a bit more room for upside. At the time of recording, their price was coming in at $29.97, and they have an NAV of $29.37. Those assets under management, 320.42 million. Management fee on this one a little higher, 0.55%. Looking at their dividend, they have a yield of 9.20%. That's a monthly dividend of 25.1 cents USD per unit. When it comes to returns, their 1 year return on investment coming in nice looking, 11.87%. Factor in the dividends, total return 21.79%. This one will, of course, do well when the S&P 500 does well, though it is still good to keep in mind that even though this is not a tech ETF, when you're looking at large cap stocks, they do tend to be tech heavy. All right, in our almost top spot at number 2, and I love the name of this one, it's the Global X Super Dividend ETF, a ticker of SDIV. Unlike the other ETFs we've looked at today, SDIV doesn't use covered calls or any kind of option strategy. It's a straightforward dividend fund. It simply holds, well, roughly 100 of the highest yielding stocks from around the world and then collects their dividends. That's where the income comes from, not from option premiums. So while the yield is high, it's all about the underlying companies themselves, which also means more exposure to market and dividend cut risk. I was going to include the top 3 companies in this fund, but I looked at them and I'm like, there's no way I can pronounce those. So let's just jump to their price, which is coming in at $24.39, and they have an NAV of $23.38. Those assets under management, a straight 1 billion. Nice. Their management fee coming in at 0.58%, and looking at that dividend, they have a yield of 9.52%, monthly dividend of 19 cents USD per share. On to their returns, their 1 year return on investment, 13.49%. Factor in the dividends, total return 24.28%. I love this one because you are getting a high income and global diversification. That's pretty good. It is worth noting that this ETF does tilt more towards those higher dividend sectors. So you're getting a lot of exposure to financials, energy, and real estate. And finally, in our top spot at number 1, we have the First Trust Vest Gold Strategy Target Income ETF, ticker of IGLD. This ETF is an interesting take on gold investing. Instead of just holding gold bars or bullion ETFs, this one holds short-term US Treasuries for stability and then layers on an option strategy tied to the price of gold. That mix simply lets it earn income from gold's movements while keeping the base of the fund relatively steady. The trade-off is that you won't capture all of gold's upside during big rallies, but in quieter markets, it's a clever way to make your gold position actually pay you something each month. At the time of recording, its price was coming in at $25.13, and it has an NAV of $25.01. Those assets under management, 339 million. Management fee on this one, 0.85%. Looking at that dividend, oh boy, we got a yield of 15.29%. Monthly dividend, 14.2 cents USD per share. On to their returns. Their 1-year return on investment looking good, 22.11%. Factor in those dividends, total return 40.69%. Holy banana bread, that's talking to me for sure. I am very bullish on gold for the next few years, and this will bode very well for this ETF. So there you have it, 5 US income ETFs that prove you don't always have to pick between growth and cash flow. For Canadians, the key is using an RRSP to dodge that 15% withholding tax and keep every dollar working for you. And of course, for my American viewers, these same funds can shine inside an IRA or a 401k where that income can compound without a yearly tax bite. The real win here is flexibility. Whether you're building for income now or setting up for future cash flow, these ETFs show there's more than one way to make your portfolio pay you back. If you are interested in any of these ETFs we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on 6E. Thank you for watching, and I will see you in the next video.